So if you've ever placed a market order and ended up being shocked by the fill price, or if your trades keep missing their targets because you used the wrong order, then this video is made specifically for you. By the end of this masterclass, you'll confidently know exactly which order type to use, whether you're trading stocks, crypto, or if you're trading forex. Because let's face it, not understanding order types isn't just confusing, it can directly cost you money, all right? So, are you ready to finally start trading smarter and not harder? Then if so, let's get it. So now, to make sure you never lose money because of a simple mistake, we'll clearly break down the 5 main order types step by step. We're going to talk about market orders first and foremost. We're also going to talk about limit orders. We're going to talk about stop orders, when you can buy a stop as well as sell a stop. And we're going to talk about stop limit orders, as well as my favorite, trailing stop orders. All right, so let's start out first with market orders. Market orders are instant entry as well as instant exit. Let's start with the market order entry, okay? So imagine you're at a busy farmer's market. You just spotted a crate of the juiciest strawberries, and you know that they're going to be gone in seconds. You don't haggle. You just hand over your cash and take them at whatever price the vendor is asking for. So that's exactly how a market order works in trading. When you hit buy market or sell market, your broker looks at the live order book, basically a list of who's buying and who's selling right now, right? And matches you with the top price. All of this happens in milliseconds. But here's the catch. If your order is big, you might get 80% of it at the price that you clicked, and then the rest at slightly higher prices. Traders call this partial fills. And in fast markets, you can lose 0.1% to 0.3%, right? Which could be $10 to $30 on a $10,000 trade before you even notice it. If you've ever placed a market order, be sure to check your fill and do a double take, because in volatile sessions, that $100 quote you clicked can turn into 115 cents or even dip to 99.85% by the time your trade goes through. New traders often assume market orders always fill at the last price that they saw, then wonder why their gains evaporate. People think that market orders are going to get you in at the best possible price, and that, my friend, is not true. That's slippage. When you place your trade, the market can move so fast, even a millisecond can change the price. So instead of entering a trade with a market order, unless you absolutely have to, the best thing to do is to use a limit order. A limit order is going to give you control over your entry price. Predetermined to fit your specific technical setup, it helps you to avoid costly slippage. The biggest myth is believing market orders get you in the best price. In reality, slippage can cost you money if the market moves against you. So here's a simple rule. Treat market orders like your emergency brake or turbo boost. Use them when you absolutely must get in or out right now. But don't use them for just regular entries and exits, all right? Now that you know how market orders grab you instant access, sometimes at a moving target, let's move on to limit orders. This is where you can control the exact price you pay and the exact price that you will receive. So now let's think about this, about shopping online for a birthday gift. You spot designer shoes for $3,000, but your budget is only $2,700. So you enter your order at $2,700, lean back and wait. The second that the seller drops it to $2,700 or lower, the order goes through. No more page refreshing, all right? So that's exactly how a limit order works in trading. You pick the exact price you want, buying or selling, and your order just sits there in line until the market meets you. If you want in on a stock at $100 only, if it dips to 90, set a buy limit at 90 and wait. Holding shares at 100 but want out at 110, Then drop a sell limit of 110 and stay put until your number hits. And the best part about all of this is that you never overpay or undersell. Your trade only happens at your price or better. But be patient. If the market jumps from 100 to 105 without pausing, your $90 order is going to quietly expire, right? And you stay on the sidelines, all right? So be cognizant of that. With market orders give you lightning speed limit orders offering ironclad price control, you're halfway there. So next up, let's talk about these stops, which are really important. The automatic safety nets that kick in when the market moves against you are leaped in your favor. So let's get started. So stop orders are literally your automatic trigger points. They are like a safety switch. In rally jump ins that work even if you step away from the screen. So say you own a stock at $100 and you want a safety net if it falls. You sell at a stop of 95. When the price hits 95, your order turns into a market sale and you get out of whatever price the market offers, no last minute panic clicking. Or maybe you only want in once the stock shows you real strength. You place a buy stop at 105. As soon as the buyers push the price to 105, your order becomes a market buy and you're in on the move. Sell stops keep your losses in check automatically. Buy stops make sure you only jump in when the momentum is real, no chasing weak dips. So quick heads up, in fast markets you can slip past your stop. You might set 95 and wake up filled at 92 if trading is thin. So for big trades, stick with stocks that have plenty of buyers and sellers. So next up, let's talk about stop limit orders, the smart combo that prevents fire sale feels. So let's get it. So stop limit orders are like precision, right? Which combines your safety net with exact price control. So here's how it works. You pick a stop price, say $95. When the market hits 95, your order activates. Instead of becoming a market sale, it turns into a limit order at your chosen price, say $94. That means you only sell if someone will pay $94 or more. You get protection watching every single move and avoid getting sold off at rock bottom prices. Your worst loss is neatly between $94 and $95, no surprises at all. But keep in mind, if the market gaps below $94, imagine it opening straight at $90. Your limit order won't fill and you're holding the stock. To make sure it triggers, keep your limit price close to your stop so that you have a real chance even in fast markets. With stop limits in your toolkit, you've got safety and precision literally covered. So finally, let's look at my favorite, which is the trailing stop. The automatic profit lock that moves up with your winners, no guesswork required. So trailing stops lock in profits automatically. Think of it like climbing a mountain with a rope that tightens as you go. Never too loose, never too tight. Here's how it works. You pick a trail stop, say $3 or 3%, and attach it when you enter. If you buy at 100 with a $3 trail, your stop starts at 97. When the price climbs to 105, your stop moves to 102, always staying $3 below the highest point that your trade reached. The moment the market falls by that $3, your order becomes a market sale, locking in every single dollar that you gained, no guessing at all. This way, your winners keep running while your trailing stop locks in profits automatically. Just watch out in choppy markets though. Small swings can knock you out too early. The trick is to set your trail wide enough to handle normal ups and downs. We gotta give it some breathing room, but big enough to avoid noise. Tight enough to protect your gains is also really important. So, have you ever had a trailing stop kick you out on a tiny dip? Okay, if so, drop dip in the comments, all right? So let's share our best trail settings. So there you have it, market orders for instant entry and exit. Limit orders for exact price control. Stop orders for easy safety nets and entry triggers. And stop limit orders for disciplined exits without rock bottom fills. And last but not least, trailing stops for locking in profits on the move. So with these 5 tools, you have everything you need to enter, to manage, and to exit your trades like a pro. Trade smarter, never harder. I'll see you in the next video.